Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Wednesday and from the United States, we will be waiting for the following economic headers to be released. FOMC member Barker speech and mortgage margin index and MBA purchase index, all with low importance. That's all for the economic calendar. We'll move on now to have a look at the numbers. On the last trading session of Tuesday, we have had a trading range from 1525 to 1545. Numbers are rounded and the market is still open. Gold spot is expected to print a close price above 1542. The number is rounded and the market is still open. Gold is trading in a bull trend above its all daily simple moving averages, and what matters for us is the 20 days daily simple moving average is number about 1506, and this market is totally bullish as long as it's trading above 1460. We are overbought on the weekly and monthly charts with high readings, and the first support is seen about 1535, followed by 1522, then 1513, and for the resistance levels it's 1550, followed by 1554 and 1570. That's all for the numbers. We'll move on now to the trading strategy. We are still incapable of knowing whether the trade talks between the United States and China is going on or it's still on hold. We got a headline today from China, and this time it's from the foreign ministry, from the official government of China, insists that they are not aware of any communication, particularly phone calls with the United States officials or even the President Trump, with regard to the trade talks. Add to that, the China's media still chanting that China won't surrender to the United States. This makes us incapable actually of anticipating the market movements, but it was obviously under pressure, the price of gold, until this news was released. We got something also to talk about is the revision of the non-farm payroll from October last year till July this year, shown that there were 500,000 of jobs were mistakenly added with an average of 50,000 job monthly. Means if you did bet on gold to go up and NFP that month came above forecasts, there's a big chance that your bet was correct and you lost your money for no reason. We know that the exchange won't do anything about this, and transactions won't be reversed. But this is raising a question about the accuracy of the data which we use to make an accurate investing or trading decisions. Also, that is something to remind you that the major fundamentals which hold the price and shape the trend, it's more important than the interim data which is released on periodic basis. We talked 2 days ago about silver breaking out an ascending triangle, which is a very bullish sign. Silver is providing clear evidence that it started to rally at its own. The lagging behavior of silver is not seen anymore, especially on the 1-day chart. And we started to see that silver is leading the rally, with gold is trying to catch up. We look for $18.70 or $18.700, then $19, hopefully before any correction takes place. You have to understand that the silver market is overbought on all the charts, almost from the 1 hour till the 1 month. So wait a meaningful pullback before entering the market. Technically, gold is trading in a bullish trend above its all daily simple moving averages and above the trend line. Uh, we are looking for a pullback actually to 1505 or minimum to 1513 with a rally that could extend to 1600. I don't advise you to buy the gold directly from the market because the market is overbought and is under a risk of reversion. This is could be happening because of the fact that this is a zone for taking profit. Add to that that the retail market is taking interest into gold, which is usually result in a sell-off. Bottom line, I'm a buyer of gold between 1505 to 1513, and I will be on the sell side from 1569 to 1620. The higher, the better. Both cases, your account should be protected and manage your margin requirements. Thank you guys for watching. I'll see you tomorrow in another video.